Well, the European Central Bank has hiked rates again. It's its 10th consecutive move higher as it prioritizes its battle against inflation over a weakening economy. The benchmark rate now at a record high of 4%, and forecasts over the central bank's next move flipped over the last few days, with money markets shifting expectations to this quarter point hike. So it wasn't a total shock. What it was a bit surprised of where it was a few weeks ago even. And I've been looking at some of the commentary this morning. First of all, Christine Lagarde, the president of the ECB, saying she can't say that rates are at a peak. And that's something that economists had been discussing. Where is the peak for the ECB, just as they've been discussing where's the terminal rate here in the United States?
Yeah, and it sounds like some of the governors would have preferred to pause, as Lagarde had told that to some reporters. But at least the majority in this case agreed to move forward with this decision. And then also mentioning, of course, here that even though some of the members wanted to pause rates now, to your point, it kind of leaves open the door for where that terminal might actually stand, at least as discussed by the committee right now.
Yeah, I was also looking at a flash note from Evercore ISI Vice Chair Krishnan Guha, who tracks the Fed closely. And he says the key phrase of the ECB statement is, quote, based on its current assessment, the Governing Council considers that the key ECB interest rates have reached levels that, maintained for a sufficiently long duration, will make a substantial contribution to the timely return of inflation to the target. And the ECB, we should say, is holding its press conference right now. And Christine Lagarde, among other things, is being asked about that so-called transmission mechanism, right? How do those higher rates feed through to actually getting inflation down? She talked about real estate, residential and commercial real estate, for example, clearly responding to higher rates. So just one example of how those rates are feeding through the system. Seems
like in terms of how it's feeding through, they also slightly revised down their projected path for inflation, excluding energy and food, to an average of 5.1% in 2023, 2.9% in 24, and then 2.2% in 25.
And by the way, the euro is falling in the wake of this decision.